Stop the scrolling. Welcome back to the only channel that cuts through the economic spin. Washington is celebrating strong wage growth at 4.7%. But we ask, is this good news for your paycheck? Or is it the inflationary poison that guarantees the Federal Reserve will crush your mortgage and business loans? We challenge the moderate narrative right now.
Let's be direct. The 4.7% annual growth in average earnings, while celebrated, is the number the Fed fears most. The Fed's target inflation rate is 2%. When wage growth significantly outpaces productivity and the inflation target, it's a direct signal of a wage price spiral. This isn't just theory, it's a guarantee of future inflation, forcing businesses to pass labor costs directly to consumers. We argue this 4.7% is not moderate growth, it's an overheated labor market demanding drastic intervention.
This sets the stage for the Fed's vengeance. The Federal Reserve has only one mandate when faced with this data: kill inflation, even if it means killing growth. They cannot allow this 4.7% to persist. Therefore, this data guarantees that interest rates will be pushed higher and held there longer. For the average American, this means the cost of borrowing for everything from a car to a credit card to a 30-year mortgage will continue its relentless climb. Any perceived wage gain is immediately wiped out by higher debt service costs.
The corporate sector is already preparing for the fallout. Companies that are labor-intensive will see their profit margins squeezed, leading to two likely outcomes: massive automation or layoffs to control labor costs, or massive price hikes passed to the consumer. This environment of high labor costs and high borrowing costs paralyzes large-scale capital investment. Why build a new factory if the labor is expensive and the loan to build it is expensive? This figure is a brake on future economic expansion.
This is the final political hypocrisy. Washington cheers the 4.7% figure as a victory, but they ignore the devastating consequence. The only way to sustain this wage growth without inflation is through massive productivity gains. Since that is not happening, the political celebration is merely a short-term narrative win that the Fed will have to clean up with painful, unpopular rate hikes. The political victory today becomes the economic recession tomorrow. The White House cannot escape the consequences of an economy they overheated. That's our uncompromising analysis. We laid out the cold, hard facts. 4.7% wage growth is an economic warning sign, not a celebration. Now we turn to you. Are you willing to trade a modest raise today for a guaranteed jump in your debt costs tomorrow? Is the Fed doing enough to stop this inflationary poison? Hit the comments below, like this video, and make sure you subscribe so you never miss an economic debate that matters.